Eric Mwathe for the weekend of April 26, 2014. This is how markets ended on Friday. As far as the US market is concerned, Dow was down about 0.85%. Nasdaq was down the most, down 1.75. S&P 500 was down 0.81. Gold was slightly up. Crude oil was down, and we see that the VIX was up about 5%, even though it closed off the highs for the day. Now for the week, we see that the Dow was down only 0.29% or 47 points. Now the one thing you can take away here is that on a weekly basis, if you're a bull, you're excited that the market did not break down here, but if you're a bear, you should be excited because the market failed to hold the breakout level. So that failure to stay above the breakout level on a weekly basis is something the bears can use for a reason to continue staying bearish, and the bulls need to start worrying about why the market cannot hold above the breakout levels. On the S&P 500, similar type situation here, even though we ended the week unchanged, down only 0.08, and we see that we had during the week we were breaking out on a weekly basis there, but we failed to hold those breakout levels. So the bears can at least take that as a reason to continue being bearish, and bulls can at least for now state at least we held this pullback here. So arguments can be made either way. If you take a look at the Nasdaq, which was down the most, was down 0.49, which is not a lot, and it also managed to hold the 50 level on the weekly RSI. So let's go to the annotated charts here to see what we have. We see that the Nasdaq back below the 10-week moving average, but it continues holding this support line on the weekly, connecting the weekly lows line, and as long as that is holding, then the market should continue being healthy despite Friday's down close. So as long as this down line is holding here on the weekly, expect the market to be healthy. If you take a look at the Dow weekly, we see that during the week it tried to break out above 16,478 and failed. So that's not good. But on the other side, if we take a look at this lows line on the weekly RSI, we see that that is holding, and as long as the market is holding above this weekly lows support, the market should continue being healthy. The Dow is holding above the 10-week moving average, which is also another sign of a market that is healthy. Now here's a problem here that you see with the Dow Transport. The Dow Transport early in the week were trading at all-time weekly closing highs, but they reversed on Friday and actually trading below the buy point previous weekly closing highs of 75.92. So that's a failed breakout as of Friday, which is not good. Also, you'll see that at the same time on the RSI on the weekly, this line has held. It held 2 weeks ago when the market was pulling back, and we also see that this trend line continues being intact. So we have a failed breakout, which should give the bears some reason to celebrate, and we also see that the bulls have a reason to be optimistic because this line has held and continues holding as far as the Dow Transport. So that's how we ended the week. Now if you take a look at the Dow Transport on a daily, you see another bearish signal because we made higher highs on the daily, but you see that the RSI continued showing negative divergence, and we made higher highs here on price, and yet the daily RSI did not move above 61.8. That's a very bearish signal, and you can see that we are ever getting close to that 50, so anything below 50 could open for a big down day. At the same time, you see that this trend line here continues holding the market, and over the last 2 weeks it even held when the market was seeing severe sell-off. So we have bearish signals on the daily, and yet we recently found support. So we'll see whether the market can continue trading in these two top side on the price channel, and also whether it's going to find support. So we seem to be developing this bearish wedge. If this is the case, more than likely over time this market might have to pull back. Now if you take a look at the S&P 500, like I said earlier in the week, we were trading at breakout levels above 1878, but we closed below that level. So that right now looks like a failed breakout, but we continue seeing downside support on the weekly RSI on this line, which connects the lows here, and most recently there. So as long as that is holding, the market should continue being healthy. Now, if you take a look at the S&P 500, you see that I'm sure some people are arguing that this is now a bearish head and shoulders formation. We will see. You can see that seems to be some type of topside RSI resistance when you draw it like that. So that's why the market was pulling back Friday. We are also getting very close to moving below 50 on the daily. Any day we move below 50 and close below 50, we should expect a big down day. If you take a look at the S&P 500 on the hourly, this line here on the hourly has been resistance, going back to the most recent resistance here, beginning of April, which is the highs there. And we've come back and found resistance precisely at that level. That's why we're pulling back. But we're not necessarily broken, because if you draw the entry point here like that, you'll see that this here was a perfect entry short term, which was there, and it has been, at least for the short term, been a nice place to get back in the market. Every time it bounced off this level, uniform action here, uniform action here, it moved back above the line here, which was the most recent entry point there. That's why we turned slightly positive in the market here 2 weeks ago, and we see we are trading precisely at that level. So if that continues holding there, then the market is going to bounce, at least short term. Also, take a look at this level here on the 30-minute chart for the S&P 500. You can see there seems to be some type of line here connecting the lows on the 30-minute chart. If this continues holding, if the market does not breach this support, then even going into the new week, we should see the market starting to pull and grind itself higher. Let's take a look at the QQQ Weekly. What I want to show you here is that on a long-term view, we continue holding above this weekly lows line, and this weekly chart goes back to 2008 and has been very successful in telling us when to get back in the market. As you can see, there was support here, which was this perfect entry point, was support here, perfect entry point here, and 2 weeks ago it hit that level and moved back. In other words, it already gave us a nice entry point to the upside, and that's why we turned slightly positive on the market about 2 weeks ago. Now, if you take a look at the QQQ on the daily, I want to show you this level here, and this goes back to the beginning or late 2012. That was a perfect entry point here, and so we draw a straight line from that perfect entry point like that, and you see that this has been, again, and I'm repeating this over the last couple of weeks, has been a nice entry point in the market. You buy here, ask questions later. Every time we bounce and hit that line, double bottom here was perfect entry point there, and most recently triple bottom here, you can argue, and we've bounced off this level. That's why, again, we turned positive, and also seeing that was an area around the 50-day moving average, or at least somewhere around the 150-day moving average is where we found support. So it makes sense that the market has already given us support based on this level here, and you can argue that more than likely over time, unless we breach this level here. Now remember, the market has been trading above this general area on the RSI going back to late 2012. As long as the market is trading in this general RSI area on the daily, the market should continue being bullish. Now, if you take a look at Apple here, you see that it broke out of this wedge that we've been talking about the last couple of weeks. So for now, the stock is a buy. We also broke out above this wedge on the daily. So for now, the stock is a buy. The levels to watch to make sure that the stock is staying healthy is on the weekly. It needs to hold above this weekly closing high of 556.96. So on the weekly, it needs to hold above that. If it moves back below this level here, then that's going to be a failed breakout. It needs to hold above that previous weekly closing high, which was a high made late 2013. Problem now is, if you go back to this line here, this line comes from the break. Let me draw this another way. So we find the break of the stock when it made the high there, and it was when it broke down here on the RSI. So we take this RSI breakpoint to a straight line, And you can see we've previously failed to hold here, which was this high. And we are now trading back at that level. If the market can hold that level and pulls back next week, then that's going to be your perfect time to get back in the market. Would also suggest that the weekly breakout would fail. So the market demands that the bulls hold above 556 if the stock is going to do well. On a monthly, the level to watch is 557.68, which is this monthly closing high in December of 2013. If it can hold above that on a monthly basis, it can do well. But if it breaks down back below that level, then that's a failed breakout. One more chart, and it's taking a look at the VIX here as I conclude the free part of this video. And you can see that on the VIX, on the 60-minute chart, we have not seen a breakout above this top side of the RSI. You can see that the only way the VIX can have a nice move is if the VIX can move above the top side of the RSI. So for now, my thinking is that the VIX is telling me that it is not necessarily very bullish. And so I would expect the VIX to be trending sideways, if not lower, and for the general market to move higher. So that's it for the free part. Enjoy your weekend. See you next time on Monday morning. Eric Mwade for subscribers. Let's continue.